right now, major stocks are taking a tumble. You have markets in the U.S., Europe, and Asia all taking a major plunge this morning. Right now, you're taking a live look at the Dow Jones. You can see it down more than 1,100 points, 2.84% as we speak. We saw this fall right as markets opened at 9:30 Eastern time today. It fell nearly 700 points on Friday. You may remember this after the release of a weak jobs report, leading to fears that the U.S. could be headed for a recession. Now, it's not just Wall Street. Japan Stock Exchange, the Nikkei, fell by more than 12% today. That is the most since Black Monday. That was a worldwide crash in 1987. Trading had to be halted for short periods in both Japan and South Korea to prevent panic selling. Let's bring in correspondent Nick Harper now joining us from Washington. Nick, why are we seeing such a difficult start to the markets this week?
Yeah, Chris, an incredible start to the week for the markets. We saw problems on Friday. The U.S. markets falling quite dramatically during the course of the day. The Nasdaq heading into correction territory. All of it being sparked by a disappointing jobs report that showed the U.S. economy only added about 114,000 jobs last month. We were expecting nearer to about 185,000. Importantly, the unemployment rate also rose, now up to 4.3%. Those two things spooked the markets on Friday. We saw that drop in the US, and then when markets opened the other side of the world in Asia earlier today, they caught the fever, that domino effect hitting Asia. As you said just a moment ago, one of the worst days that we've seen for Asian markets for a long time, since 1987. Then Europe also had a very difficult day. They're still experiencing problems, and here in the US, we're only about an hour and a half into trading. It is looking like a very, very difficult day. On top of that jobs report and that fear that the US is heading to recession, we've also seen difficulties for tech stocks in particular. We've seen this big rally in recent months driven by the hopes for the AI market. Nvidia, one of those companies that's seen a real boost with its share price as a result of that hope. All of that seems to have faded in the last week or so with disappointing earnings for companies like Nvidia, like Apple, like Facebook. And that tech problem is causing particular problems for the tech-heavy Nasdaq, but that's being felt right across the other indices as well.
Nick, how is it that the economic challenges, these difficult reports that came out last week, are not only having an impact here in the U.S., but such a major impact on the foreign markets as well?
Yeah, it's funny that because it is just so interconnected with companies, with globalization being the way that it is today. We do see difficulties in one side of the world having that ripple effect right across the other side of the world. Because at heart, here in the US, it's about whether or not we're heading towards a recession, which in theory shouldn't worry other countries that much. But when you consider the US is the biggest economy, there is that fear that if things go badly wrong here, that in turn will impact its ability to buy goods from other companies, to trade with other countries as well. So when things go wrong here, when we see these real panics, especially on the markets, they are felt right across the world, hitting all of the other stock exchanges in Asia and in Europe as well.
And we're seeing that play out thus far on this Monday. Correspondent Nick Harper for us in Washington. Nick, thank you. Joining us now to talk about what this means for you is Greg McBride, Chief Financial Analyst for Bankrate.com. Greg, thank you for being here. What are you expecting in the markets for the rest of today?
I think we're going to continue to see this volatility. You've got a lot of uncertainty. Markets hate uncertainty. So a few weeks ago, it looked like nothing could derail the U.S. economy and that the soft landing was in sight. Well, we've seen a couple of weak economic data points come out lately. The jobs report on Friday wasn't the only one. It was just the latest one. And so it's raised fears that maybe the economy's slowing faster than expected. You've seen some earnings disappointments, some less than favorable outlooks from some of the CEOs on earnings calls. You add to that the uncertainty about global unrest or currency changes, particularly in Japan. All of that's a recipe for volatility. Just to put things in context, we're not even at the point yet where the market has pulled back 10% from its high. Yet, a 10% pullback, which is known as a correction, tends to happen on average about every 12 months or so. We're overdue for that. So, I mean, this is a normal course of volatility, even if it has seemingly come on suddenly.
Yeah, because I remember when Jerome Powell said that a rate cut for September was on the table, the market had one of its best days in months. And then it feels like that was a really long time ago, because then the unemployment numbers come out. Unemployment hits 4.3%, its highest point since October 2021. What are some of the other pieces of evidence that is being pointed to right now as far as concerns about the economy as a whole going forward?
The manufacturing sector has really shown some weakness. And, just to kind of boil it down to its most simple form, if they're not going to make it if people aren't going to buy it, right? So the manufacturing sector is often an indicator for just how well the real economy is doing. If manufacturing's strong, well, they must be selling a lot of stuff. They wouldn't make it if people aren't going to buy it. But the reverse tends to also be true, at least from a psychological standpoint. So you pair that manufacturing data with the jobs data, and it wasn't just the jobs report Friday, but it was downward revisions to previous months' releases. We saw even the Fed's what's called beige book, their look at the on-the-ground economy a couple weeks back. It was soft, and I think that's where it started a lot of these concerns that, maybe the economy's not as strong as we thought, or maybe it's slowing faster than we thought. And then when the Federal Reserve said that they're going to have to wait until September before they can grant everybody that much ballyhooed interest rate cut, then you started to have investors start to have a little bit of angst about, well, what if they're behind the curve? And that's really what's fed a lot of this volatility we've seen the past couple of days, today and Friday.
The Federal Reserve's next meeting is going to be in September. The expectation is that rate cut will come. With the volatility we're seeing, how likely is it that the Federal Reserve would cut rates prior to that meeting in September?
It's not going to happen based on normal volatility that's just kind of normal for investors, and a job market that's still at 114,000 jobs. Yeah, where we would see that, the catalyst for an emergency rate cut from the Fed would be if you started to see liquidity issues in financial markets. In other words, if the financial plumbing was getting clogged up, that's the point where the Fed steps in with an intermediate rate cut. Normal volatility, an expected slowing of the economy, not going to cut it.
And we've been hearing concerns about a recession since last week. Now that seems to come back into focus. Those concerns, how likely is it that's where we're headed?
That risk, Chris, is never zero. So even when we, strong economic data, the odds were being revised down. But even then, about 25 or 30% of economists were still expecting a recession in the next. That risk never falls to zero. But to put that in context, 65, 70% of economists predicting recession. So things look much brighter now than what we were expecting, say, a year and a half ago. So that risk never goes to zero. Those risks are always still, at this point, we've got a lot of favorable attributes to. Earlier this morning, the services index came out. That's where most of the spending in the economy comes into play. It showed expansion. So, there is some positive at some of the negatives we've seen of late.
Great context as always. Greg McBride, thank you for joining us on Morning Rush.